Hello, this is Quad G with Major Market Movements, and in this video blog update for July 30th, 2014, we're going to take a look at the euro in the long-term or mid-term Elliott wave count. So currently I'm anticipating the euro is working on a very long drawn-out triangle pattern. Currently wave A, B, C, and now D has formally ended, and now we're working on a wave E correction that may last over the course of several weeks and months very likely into 2015. Triangle corrective structures are built of 5 sets of 3 waves, and you can see that wave A here was built of 3 waves, 1, 2, 3 for an ABC. Wave B also 3 waves up, A, B, C, and then wave C down was actually a double zigzag for 7 waves, ABCX, ABC for the end of C, and then 3 waves up, ABC for wave D. So the final 3-wave structure into wave E, I currently anticipate it ending somewhere in the Fibonacci zone, somewhere between the 1.2780 level to 1.3250 approximately. Once this 3-wave correction is complete, I anticipate an impulsive move up out of this bullish triangle pattern into wave 5 or wave C. Also, you can see this orange trend line has now been tested 3 times, 1, 2, 3, and a 4th test after further pullback. A 4th test should be a rule of 4 breakout. Subscribers of the Major Market Movements subscription service are currently short, and I want to point out some of the clues that indicated that it was a good time to get short for this move to the downside. We'll first take a look at the QG3. Now the QG3 is a combination of 3 moving averages that include the 20 DMA there in blue, the 10 EMA in green, and the 3 EMA in red. And back here, roughly around mid-July, we had a bearish crossover where the 3 EMA, the 10 EMA were below the 20, and we had all 3 were in an open alignment to the downside, and this was a sell signal to get short. I also want to point out here again is our QG3. You can see here we got a clear bearish crossover to the downside. Also, I want to point out that previous to this crossover, the Bollinger Bands had been pinching in. And when the Bollinger Bands pinch like this, it means that the structure is consolidating, it's building up energy, and almost like a tightening of a coil. And once the upper Bollinger Band flares to the upside and the lower Bollinger Band flares to the downside, it's a really good indication that that energy, that coiled up spring, is going to let loose. And sure enough, it has. I also want to show you here that back here in late June, early July, on the weekly candlesticks, we had an outside key reversal on this week, and that set our key top here at the 3700 handle, and it's been a sell-off since. That also anchored this trend line, which ended up being a really great backstop for a short position. Currently, on the RSI 14 on the daily, we're well into oversold levels, below 30. So I anticipate, and so far there is no positive divergence that's built up just yet. So I think that's a really good indication that we'll continue to see some selling. And then also you can see the MACD is open to the downside. So currently we're working on a wave A down. Eventually I think we'll see a counter trend bounce up for wave B, but it should only be a dead cat bounce, and then a final washout into wave C. And this will be the prime opportunity to get long again for this next move up. Okay, I hope this was a benefit to you, and if you're interested in learning more about technical analysis, Elliott waves, candlesticks, feel free to sign up for my 30-day free trial. You'll see firsthand how I do business, and hopefully it will give you an edge in your trading. Okay, that's it for now. Adios.